Markets finished a little mixed today with the Dow up a little bit, NASDAQ, S&P down. Let's jump in, take a look at what's going on. Coming off of the holidays, the Dow finished up 0.3 or 38.63, up 0.11%, S&P down 0.4, NASDAQ down 1.38 as the capital rotates through the system and tax loss selling continues. The interesting thing is the bonds. Let's take a look at the bonds here real quick. Big news is the bond market. The US 10-year 3.851%, back up to that 4%, approaching that 4% range. We'll take a look at that in a minute. The 1 year at 4.699, almost 4.7% for a 1 year treasury bond, a 6-month treasury bond at 4.686, and a 4-month at 4.6. So that's putting a lot of pressure on stocks. We'll jump into the charts here in a minute. But basically, what's going on is that bond yields pushed higher, putting pressure on growth stocks like technology. The yield on the 10-year was up nearly 11 basis points. And Apple was among the worst performer in the Dow, falling to levels not seen since June 2021. It's basically the continuation of high yields depressing growth, high yields depressing growth with distribution into other sectors that are smaller but not big enough to change the headline index. So that and a combination of tax loss selling and repositioning for 2023. So that's putting pressure on the markets. We're still looking for a little bounce into the end of the year, but we're running out of daylight for that to happen. We have 3 trading days left in the year, and we have a 4-day week next week as markets will be closed on Monday. So tomorrow would be a good day for the markets to kind of rebound and turn around a little bit, even though today is Tuesday, and normally you see turnaround Tuesday. But let's take a look at, here's the Dow right here, kind of bouncing along this little area here. NASDAQ down a little bit today, not quite at breaking the November low or even the October low. Dow Jones nowhere near it. S&P, same thing, nowhere near that October or November low right now, but getting close. Let's take a look at the moving averages. Again, below the 50 and the 100, looking for that cross on the S&P. NASDAQ below all major moving averages. The Dow finding support initially above the 200, now finding support on the 50-day moving average in an upward trajectory, which is good for the Dow. And again, the big issue there that everybody's watching is Apple reaching for these and finding support on those June lows, which was the initial low that did not get broken in October or November. But right now, that June low providing support for Apple below all major moving averages. And if it breaks that, then that could put a lot of pressure on the NASDAQ and that indice. So let's take a look at the VIX. So the VIX kind of continuing to range right now, figuring out what it's going to do. The Dixie kind of holding steady right here in this little pattern after declining to 104, but the 10-year is the big news of the day. Complete reversal on the 10-year, kind of like we saw back here in August and like we saw over here in October. August was the biggest downtrend that the 10-year saw, and then it reversed all the way back up to 4.3%. So all eyes will be on that 10-year to see if it continues its trek while we get a rebound in stocks as capital continues to rotate. Let's take a look at Bitcoin. And Bitcoin ranging over the last few days over Christmas, doing absolutely nothing at all. Didn't look anything like last year. Down today, a lot of people were calling for Bitcoin to pop out of this consolidation because of the low volatility. It went the other way instead. But I think that it's more likely to pop up than down from here at this point before it goes to retest these lows and ultimately go to put a newer low in, a new lower low in Q1. Which is kind of what I'm looking for and expecting with the markets right now. A series of higher lows, lower highs still. But right now, I think we might see a nice little bounce out of Bitcoin to the 17 to 18,000 range, retest these levels here before it ultimately rolls over to retest that low, probably get a bounce and then roll over into a new low going into Q1, which is kind of what I expect for all the markets. Whenever you've had the end of the year, as bad as this is, and the markets are still in a bear market, Fed is still tightening, so nothing has changed there. So this is a macro bear market, and when markets have ended the year on the lows, Usually the first quarter of the following year is not great. A lot of people are calling for the Fed, analysts, economists are calling for the Fed to pivot next year. That's never good when the Fed does pivot. You got to be careful what you wish for, because whenever the Fed pivots, usually what happens next is this right here. So the last time the Fed put in a pivot was in that 2018 area. So that's right in this area here on the Dow. This was a Fed pivot right back in here in probably December timeframe, October, November timeframe. And then the market found a low after the Fed actually pivoted. 2008 and 9, of course, was the last. That was a financial crisis where banks started failing. The markets were just in a macro bear market like we are right now, just kind of rolling over. The banks started failing, everybody else started failing, and the Fed came in and bailed everybody out. So this was your, QE Fed response. I wouldn't call it a pivot, but they did start lowering rates, open the cannons, and off to the races the markets went. So generally, a lot of these things start, the market continues to tail off. Another thing that was happening back here, a lot of people forgot about, was Congress failing to pass a spending bill to keep the government open. So a lot of that was happening. John McCain was on the trail, on the campaign trail, and he, suspended his campaign to come back to Congress to kind of get this thing passed. And I guess that's when he was running against Obama, maybe, I can't remember. Back in 08, 09, what was going on, who was, back in that time frame. But anyways, I do remember that. I think that's what it was. And, you get losing track after a while. I don't know if remember if that was Clinton coming out or if that was Obama going in. I can't remember. But anyways, I do remember that the government did not pass the spending bill, and McCain, headed back to Congress and everybody else to kind of, try to put all that back together again. But anyways, the moral of the story is, with the economy in the shape that it's in, the Fed having not pivoted yet, recession having not taken hold yet, markets are just now kind of ranging, testing previous lows of October, November. Once those break, then we can look for some more significant downside and start testing those pre-pandemic levels. That's the NASDAQ, the Dow Jones already tested that level back in October, and the S&P has yet to test that level either, just like the NASDAQ. So that's kind of what I am looking at. Ethereum bouncing along just like Bitcoin. Most of the major altcoins kind of doing the same thing. XRP getting a little bit of a bump here, but just ranging still in this area. No reason or signs for any kind of a macro reversal at this point. It's all just speculative price action right now, and consolidation, looking for more downside and exit liquidity as the markets continue to work towards a recession contemplation. And like I said, I think Q1, coming off of a year that we've coming off of an ending to the year that we're in right now, we can probably expect Q1 to be pretty difficult for the markets, and definitely hunting for new lows, putting in potentially new lows, and then we'll see where we go from there. But without a significant issue in the market, significant financial crisis of some sort, the Fed is not going to pivot. They've got to continue to work against inflation. We're going to see those numbers, come out next year. The Fed's going to meet at the end of, first part of February with their next decision in terms of interest rate policy, which we can expect them to start slowing down on rate hikes and things like that, and the pace. But at the end of the day, I don't think the Fed is going to change course anytime soon without some sort of incident in the financial markets, credit markets, things like that. So these are the things I'm looking at. I'll see you in the next video.